All right. How's everybody doing? Let's see. So we had some technical difficulties per usual. The YouTube live thing kind of froze up when I was trying to launch it. So here we are under a new link. Um, how's everybody doing? It's a beautiful day. It's a beautiful Friday here in San Diego. The sun is shining and we're just working on wrapping up the week here. But I wanted to go live and do another traffic talk episode. So we got a lot of good stuff to cover today. Feel free at any time to put any questions in the chat. So feel free to ask any questions as we go along in the chat. I may not answer them right as you type them, but I will make sure I get everybody's questions answered at the end, or if it's relevant, I'll answer it as they come in. So let's go ahead and get started. So just some updates here. So it's been a couple months since I've last done this video. So I've just been spending most of my time just helping our media buying team. So yeah, our our business here, um, we have really two different sides of the business. So we have the main business is just our media buying business, where we have a team of people running affiliate campaigns in the lead gen space, running ads, under our funding and our supervision. And that's our main business. And we have another company as well that's an affiliate network business. And I'll talk a little bit more about that later. But I've been spending a lot of my time just kind of helping our media buying team with, writing copy, doing data analytics, coming up with different angles for ad campaigns. And yeah, we've really just been, working hard on trying to continue our growth here this year. So some updates as far as where we're putting most of our focus right now. So um, there's been some changes since the last time I updated you guys. And, earlier in the year, we were focusing a lot on like TikTok and YouTube. Um, we are actually back again to putting most of our focus on Facebook ads. And I'll tell you why. So, Facebook ads has always really been our bread and butter. It's always been the best traffic source for us. Um, Facebook is always been our highest volume traffic source where most of our revenue is coming from. We were trying to branch out earlier in the year with more traffic sources like Facebook and TikTok. And TikTok was good for a while in the beginning of the year, but in the past month or so, we've been finding TikTok to be very inconsistent. So we've been having a hard time actually maintaining campaigns at scale on TikTok. Like one day it'll be doing well, the next day it'll be doing poorly. And there was just so much inconsistency in the results on TikTok that we decided to actually put more of our focus back on Facebook over TikTok. We're just seeing a little bit more consistency, especially when it comes to scaling on Facebook versus TikTok. Um, that being said, TikTok is still a great platform, but I think I don't know why there must have been some changes or something that happened with their platform in the past month or so, that really started to kind of affect our results. So at the end of the day, we're going to put most of our focus on where the revenue and the results are coming from. And right now, for us, that's Facebook. That being said, other people have different expertise and do better on different traffic sources. Like some people do really well on YouTube, and some affiliates swear by YouTube and Google as their primary traffic source. YouTube is a great traffic source, but it's generally been a little bit more expensive than Facebook ads for us. Um, so yeah, right now we're just still mainly focused on Facebook. I think we'll probably venture back out to running more stuff on Google, maybe in the second half of the year. But right now we're just really focused on maintaining our growth and scaling on Facebook. So other than that, we've been focusing a lot on pay per call. So I've mentioned pay per call in previous episodes, but right now, actually, about 80% of our company revenue is coming from pay per call campaigns. Um, the reason why I like pay per call is it's just been a little bit higher converting than leads for us for most verticals. So higher conversion rates basically just means you're making more money. We've been finding the pay-per-call campaigns to be more lucrative than running campaigns to lead forms. So yeah, I'm happy to talk more about that. Um, yeah, so other than that, I do want to put, I've been focused a lot on our internal team, but the reality is that um, sometimes we just have more opportunities with our internal team than we can really handle. So if anyone's looking to partner with us and run ads with us on our affiliate network, there's always opportunities there as well. So just a little background about that side of the business. So the affiliate network company we started back in around 2018. So it started basically right after we launched our lead gen engine course. We had about like 300 people go through the course, and afterwards, I invited the students of the course to join an affiliate network where they could promote offers under our network. And our affiliate network business is still alive and well, and it's still a big part of our business. Our internal media buying team is more of our main focus, and we produce more revenue there than on the network. But if you're an affiliate and you're looking for just additional opportunities, one of our main strengths is that we've been really strong on the client side. So we have a really solid business development team that's always bringing in more clients and opportunities. And sometimes it's just more than we can handle. And for the most part, we prefer to fill all of our caps and handle all of our clients' needs with our internal team. But sometimes there's opportunities where there's so much cap that we're not able to fill it internally. In which case, there opens up opportunities for affiliates on our affiliate network to help us fill that cap. So we can't we can't we can't have every client and every opportunity that we have be run by affiliates. Like a lot of clients of ours ask us not to rebroker to affiliates or not to put it on the network and to just do it internally, and we respect that. Some clients are okay with it and have large caps. So yeah, there's always some opportunities there. So if you're interested in branching out into more areas like pay per call or different lead gen verticals, um, yeah, we can really be strategic together, and I can point you in the right direction as far as like where I see the most potential and really help you out on that side as well. So I just wanted to put that out there. Little bit of a plug before we really get into the content. So if you're interested in that, you can reach out to me on Skype. My Skype ID is tdayskype 123. So let's see what are we going to be talking about today. So we're going to be focused. We're going to be talking about some updates as far as different scaling approaches that we're taking. So there's been some changes in the way that we're structuring scaling campaigns on Facebook. Um, Different ways that we're going about doing things and what I previously covered. Things are always changing. Our strategies are always changing. So I want to keep you guys updated on what's working now for things like scaling strategies, stuff like that. So we're going to be talking about a scaling strategy that we use on Facebook. But before we get into that, I want to talk a little bit about just like what's going on with the economy in general. So um, as of the beginning of July here, technically we've entered into a recession. So a recession is technically defined by 2 quarters of negative growth. So we've seen that in 2022 here for basically the 6 months of the year. We've seen 2 quarters of negative growth, and now we're technically in a recession. So people are starting to get very worried about this. We've seen big downturns in the stock market and the crypto markets. However, personally, I'm not really seeing a lot of the usual signs of recession showing up in our business. So, um, even though we're technically now in a recession, I'm not really all doom and gloom as far as my outlook from here on forward. I mean, I'm not really like a macro economist or anything like that, but when you're running a business, multi-million dollar company, it's good to try to kind of forecast things that could happen so that we can prepare ourselves. During COVID, it was really brutal. So when the recession hit, then um, our business revenue dropped like dramatically. Like our business revenue dropped by like 80% for a few months. I mean, mainly just due to people not going into work, and most of the people that we sell leads to operate call centers where the employees at the call centers just weren't even like working, and the call centers were just shut down. And it was really brutal during that period of time. But right now, I'm not seeing any of that at all. So all of our clients have been super hungry. During the COVID like stock market meltdown and this and that. I mean, clients were just like shutting their doors. They were cutting budgets. They weren't buying as much leads. They were reducing caps across the board. What I'm seeing right now is not that at all. So I mean, everybody's super hungry for traffic. I haven't really heard of any slowdowns or um, companies shutting down that we're working with. And our company revenue growth has actually been growing month over month so far this year. So yeah, I mean, I'm not really too worried about it. But let's talk about how you can prepare if there is some sort of prolonged recession. So, in our industry, if there is some sort of, you know, financial disaster, there's going to be certain areas where you want to try to be defensive, okay? Because there's just certain things that can come up when you're running an affiliate model business. You're essentially running an accounts receivable business model where you're putting up your own money and you're waiting on your accounts receivable. You're waiting for clients to pay you back for the leads that you generated. And essentially, if we were to go into a deeper recession and people start to have financial hardship, more there tends to be more risk than on the accounts receivable side of the business. Basically, if clients are struggling financially, they could basically just start being flaky on the payments. So what can we do to be proactive if we're going into a recession is to basically work on your payment terms. So if you're on payment terms that are long, like monthly net 30 payments, that ends up being more of a risk in this environment. So, what could you do to be proactive? You could probably push for faster pay terms. So, if you're getting net 30, you could go bi monthly, so getting paid every 2 weeks, or ideally push for weekly pay if possible. So, yeah, I mean, if you're getting weekly pay, it reduces your risk of a no pay significantly. Worst case, you're going to be out of like a week's payment. But if you're running on net 30 payments and you're not really getting paid until a month plus 30 days after you generate the revenue, that could actually like be disastrous if you were to get a no pay from a client. So that's something to focus on. And other than that, you just want to be prepared to stomach any ups and downs in the business. So in our business, we've gone through tremendous amounts of volatility. Like we had, like I said, we had our revenue drop by like 80% for a period of time, 60, 90-day period of time during the COVID lockdowns. And then after that, we saw a tremendous amount of volatility to the upside as our business grew and expanded after that. So um, the thing that you need to think about in this internet marketing affiliate industry is that there's always some area that's doing well, even in recessions. I mean, even when things were completely shut down and the lockdowns hit, there were still people that were firing up campaigns for, you know, masks or whatever the hot verticals were at that time. But um, there's always going to be some area that's doing well, even in a recession. So the best part about being an affiliate is being able to be fluid and to flow into areas where people are making money and not being married to any one specific vertical or any one specific client, and be willing to be nimble and be versatile and navigate through any challenges that come your way. Um, so, what else can you do to be prepared if there is some further financial downturn, diversity is always a good thing. In any sort of economic environment, you always want diversity with more campaigns, more buyers, more verticals. Um, always be working on diversifying. That's going to help you um, keep stable. And other than that, you don't want to overhire. So if if we end up going into a deeper recession, like a big mistake that could potentially be made would be overhiring employees and ending up with like a large amount of salary obligations that you're not able to cover if there's a slowdown in your business. So um, definitely don't get overextended in that department. So, our business, we've actually taken like a pause hiring for now. So, we actually don't have any like open positions at the moment. We're just really working on getting our current team more diversified and scaling up with our current media buyers with more campaigns and just really making sure that everything's concrete solid right now. And overall, honestly, I think, even though recessions are very, very hard on people and, it often results in a lot of job loss and people having a hard time making ends meet, as an affiliate, this should really be viewed as your chance to get ahead. So, what we can do as affiliates during a period like this is just focus on areas where you can make money and just focus on what you can control, which is your own business and your own output. And if you're able to make money while the whole the stock market's in decline and the real estate market's in decline, then you're really getting ahead. Because if asset prices and everything are just running away from you, it can be hard to keep up. But if you're able to remain cash flow positive while there's a lapse in growth, then you're going to end up much better on the other side. So yeah, that's the way to look at it. So other than that, let's move on now and talk about Facebook ads. So in previous video, I was telling you about a scaling strategy that we were using with ad set budgets and basically duplicating ad sets to scale our Facebook campaigns. Um, we've actually reverted back now to a prior scaling strategy that was really good for us for a number of years that we moved away from, but we've actually moved now back to a CBO scaling strategy. So I'm going to give you a rundown on what this strategy is and how you structure it. So CBO is campaign budget optimization. So campaign budget optimization is where you have a Facebook campaign and you're putting a budget on the campaign level, and then you have ad sets within the campaign, and the campaign allocates the budget on the campaign level to optimizing the best ad sets within that campaign. Um, I saw on some of my ad accounts recently, Facebook actually changed the name of CBO on some of my accounts to some different name. I can't remember what it was off the top of my head. It was like ABC or something like that, but we'll just call it CBO for now. I don't know what they're doing. They're always changing things. It's hard to keep up. But let's say that you have a winning ad that you want to scale on Facebook. So what you should be doing is set up a scaling campaign for that winning ad set. And what you should do if you're trying to, push a good amount of budget is put a decent budget on that campaign. So about I would say about like a $1,500 budget on the campaign level. And then within the CBO campaign, you want to have 3 duplicates of the winning ad set with just one ad in each ad set. And what Facebook will do is it'll allocate budget to ideally the best ad sets within the CBO campaign. It's not perfect, but what we do is we actually will take that CBO structure of um, one CBO campaign for the winning ad set with 3 dupes of the winning ad set in the CBO campaign. And what we'll do is we'll duplicate that CBO campaign like 6 or 8 times. So if we're trying to spend north of like 10 grand a day on an ad account, we would take that $1,500 CBO campaign and duplicate that maybe 6 times or 8 times. Um, and essentially, what we would do is every day we would be launching these um, new scaling campaigns with the CBOs. And in the morning time, like before noon Eastern time, we'll kill off the lower performing CBO campaigns for that day, because every single day the CBO campaigns are going to have different performance. And the Facebook optimization engine, it's always sort of random, like what campaigns get what results. So like you might see a campaign that's doing super well, you might see a campaign that's just twice as expensive as that campaign. So what we do, um, before noon Eastern time, basically before the second half of the day, is we kill off the lower performing campaigns, um, and only run the cheap ones for the day. So that's basically the scaling strategy, and you can do that out across multiple ad accounts too with sharing a pixel. So if you want to spend more than the 8 or 10K a day on the one account, you can break that out across multiple different accounts, or you could even just do higher budgets on the CBO level, like $2,500 on the campaign level. um, but yeah, that's basically our main scaling strategy right now. So how does this differ from the strategy we were using before, and why is it better? So the strategy that we were doing before was basically to have a scaling campaign and have the budgets be on the ad set level in the campaign. And then when we wanted to scale, we would just duplicate the ad set like a lot, like 80, 100 times. And we'd have kind of low budgets on the ad set level, like 2 times the payout of the offer we're promoting. And then we would do tons of duplicates on the ad set level, within a scaling campaign. So the reason why I think that the CBO structure does a little bit better than that is because of auction overlap. So if you're doing a ton of duplicate ad sets, they're actually going to be like competing with each other to some degree. I mean, we do duplicate CBOs because we never know like which are going to really work on a daily basis with like hitting different pockets of however Facebook's going to optimize it. We always want to have some optionality as far as like, okay, this isn't doing as well, so kill this for today, or this duplicate is doing well, so we'll keep that running. But when you're doing a lot more duplicates, like 80, 100x ad set dupes in a scaling campaign, um, they're going to be competing with each other, and it's going to make your costs higher. So basically, we're doing less duplicates of the ad sets, like only doing 3 of them in a CBO. And not only that, but the lower performing ad sets in these CBO campaigns will actually kill off too. So our goal throughout the day is basically to reduce the dupes and only run the best pockets of scaling campaigns or ad sets within the scaling campaigns for that day. Try to reduce the amount of auction overlap while still having some optionality as far as this is good today or this isn't good today. But yeah, that's basically the logic behind it. So yeah, if you have any questions about that scaling strategy, I see there are some people tuning in live. You can go ahead and ask anything you want in the chat. I don't see anything for now, so we'll keep on moving forward. So um, as far as the Facebook testing strategy, so that our testing strategy is still the same as what I've mentioned in the past. So for Facebook testing strategy, we're basically putting our tests into one testing campaign with budgets on the ad set level, where we'll have one ad per ad set, and every ad set is basically just testing one thing. So um, yeah, that's for the budgets on those. We'll usually keep the budgets kind of low. So if we don't know how a test is going to perform, we might just put like a 2x the offer payout budget on the ad set for a test budget. Let's talk about some additional sort of testing tips here. So when it comes to testing an ad campaign, there's so many different aspects of an ad campaign to test, whether it be your creative, whether it be your ad copy, the headline or the body of the ad itself, whether it be the landing page, the offer, right? So what I suggest doing when it comes to testing is to really just focus on testing one aspect of the campaign at a time. So usually the thing that moves the needle the most is basically your ad creative. So start with the ad creative, whether it be images or videos. Start with writing scripts. So if you're doing video ads, the first step for testing would be to write a handful of different scripts, like 10 scripts with different angles, and just launch only creative tests and narrow it down to whatever the number one top creative is. And you can always go back and retest things, but I find it helpful to just test one thing at a time, because if you're testing so many different things at once, like testing ads, but then at the same time, like rotating landing page variants, the data can get really confusing, um, because these things impact the results. Like if you're running an image ad versus a video ad, it could impact the click-through rate of your landing page. It could impact like the offer conversion rate. So the best thing to do is just to keep everything static except for one aspect, and just focus on testing one aspect at a time. So where I would start is with the creative itself. So test, a handful, a few dozen different creatives, narrow it down to the one top creative, and then move on to the next aspect, which would probably be the landing page. So once you identify like which out of the first like 20 creatives you test is the best, single out that one creative and then run that one creative to maybe 5 or 10 different landing page variations, and then only focus on landing page variations for that round of testing. um, Pick whatever the top landing page variation is out of the 10 or whatever that you test. um, Keep that one creative static, keep that top lander static, and then go back to the Facebook side and test 10 different headlines on the Facebook ad to that. um, Pick whatever the headline is, and then test 10 different bodies of the ad copy on Facebook. So that's really the best way to go about it. And then once you go through this process, then you can go back to the beginning. So once you've identified like what the best ad is, what the best lander is, what the best copy is on the Facebook ad, then you could take all that and then revisit the ad creative and test, 10, 20 more ad creatives, and then just improve each element of the ad campaign sort of one at a time in a really just sort of focused, diligent way. And this goes for any traffic source. So this isn't just this isn't just Facebook. Like this goes for any traffic source that you're running campaign on. Okay. So let's see. So yeah, don't try to test all the aspects at once, like copy, creative, lander. The data will be really confusing. So let's see. Aman asks, can you please give some good tips on TikTok ads? So yeah, like I said, we haven't been favoring TikTok that much compared to Facebook, for reasons that I said before. It's been a little bit more inconsistent for us. I don't know. I think other people might be finding that too. I work with a lot of people, and I'm close to a lot of people that run TikTok ads, and I've been hearing other people having issues with TikTok in the past month or so. I don't know if something changed on their platform or what, but we've been finding inconsistencies. So what I've been finding on TikTok is that like we would launch an ad in a test campaign, and we would get like a pretty like favorable CPA at like a low budget, like 1 or 2x the offer payout. Like wasn't hard to get things to work at a low budget. But then as soon as we try to take it to scale, we saw like all kinds of inconsistencies. So that's why we've been putting more focus on Facebook in the past month. So if you've been kind of struggling with inconsistencies on TikTok, it might not actually be your fault. Like I have a feeling that there's something going on with the platform. I always hate to like blame something on a platform or something like that, but we just had so many issues like across so many different media buyers on our team doing different things that um, we just had to start to move our focus into where the the money and the revenue is coming from. So right now, like we don't really have a huge amount of TikTok stuff going. So, I might not be the best person to answer that question right now as far as, how to really crack TikTok at scale. Like it hasn't really been something that's been that great for us in the past month, to be honest. So Lorenzo asked, "Hey, what niches are you in?" So we focus on the major lead gen verticals. So mostly insurance and finance. So health insurance, life insurance, car insurance, all kinds of different insurance. We run in financial verticals like car loan, mortgage loan, personal loan, debt relief. So yeah, basically we focus on like the biggest verticals in the lead gen industry, which tend to just be in the insurance and the finance verticals. So that's sort of our specialty. And if you're looking to branch out into any of these areas, like I said earlier, we do have an affiliate network where you can actually partner with us and we'll give you buyers and clients. If you've been looking to branch out into pay per call offers, we're very strong on the client side. So we always have extra cap for things and can point you in the right direction as far as where we see potential and what we see working. Lloyd asks, will you be having a CPA course in the near future? Honestly, probably not. So yeah, we're not much in the business of selling courses anymore. We're more focused on our media buying business here. Yeah, so we had a popular course that we came out with in like 2017, 2018. It did well. My only qualms with like the course selling business is just it's hard to really control like the pirating. So I think we had like something like 300 people pay for our high ticket course, which was great. But there were also just thousands of people that just like pirated the course, which I don't know. I have kind of mixed feelings about that. Like, um, it's great to see people like advancing and learning new skills, and you know it's always great to help people. But like we really poured our life and soul into that course that we made, and um, yeah, I mean, it's a little frustrating to just see like it just get pirated and all the information just kind of leaked out for free um, you know, without people paying for it. But that's just kind of what that business is. So yeah, it's kind of impossible to stop the pirating and stuff if you own a course like that. But it's honestly a main reason why I don't really do much courses anymore, because like I don't know. It's just the money's not quite there. Like we make our money with media buying, not with selling courses, and that's more of our bread and butter. So let's see. Other than that, does anyone have any more questions for me? So um, go ahead and put it in the chat here. Okay. Other than that, so I've talked about crypto before in past streams. I'm still very bullish on crypto. So you know, I ended up buying sort of like the top of the last crypto bull market, so I didn't end up selling anything. I ended up writing down a lot of my positions, just holding on as prices fell. In the past 6 months, it's been kind of like brutal, but there's certain areas that I'm like really optimistic about in crypto, specifically like these next generation blockchains. So we had Bitcoin was the first blockchain. It showed us that we could have digital scarcity and a rules based monetary system. The second generation was with Ethereum, where Ethereum showed us we could have basically applications run on a blockchain and have different use cases for crypto, like trading platforms, borrowing and lending platforms, NFT platforms, and now there's sort of a next wave of innovation coming with basically third generation blockchains that can really handle the scalability that applications require to scale to mass usage. So a blockchain that I'm specifically interested in is Avalanche. So I've talked a little bit about that in the past. But um, essentially, like the issue with um, Bitcoin is that it's a bit limiting. Like it's great at what it does. It's a sound money based protocol, and there's going to be a lot of demand for that. But it's basically digital gold, and some people are interested in that. I'm a little bit more interested nowadays on the innovation of what's happening on these next generation blockchains. I'm really interested in what's going to be happening with the application layer on crypto. So now that we have next generation blockchains like Avalanche that can actually support thousands of different applications and millions of daily active users, um, it's going to be really interesting. Like this is a space that you want to keep your eye on. So I know there's a lot of uncertainty about like where the economy's headed, if we're going deeper into a recession, if there's going to be some sort of blanket ban on crypto by the government. I'm not too worried about any of that. Like I try not to really focus on price too much. Like the price is going to move up and down. There's going to be multiple bull and bear markets, over this decade. But what I would like to focus on is innovation, and where I want to put my focus on is where basically the most bleeding edge technologies are to facilitate innovation, because what moves something out of a bear market is innovation. And what happened recently in crypto was we saw all of these centralized companies like Celsius, BlockFi, basically blow up because there was human error in how they were managing their finances. Basically, the centralized companies took people's money and invested them in risky trades. And really, what they were doing is they were investing it in illiquid DeFi applications based on Ethereum. And when people started to withdraw their money, they basically didn't have enough money to pay everyone back, and there was a big kind of bank run and blow up that happened very, very quickly. But where the issue was here was more on the human error side. Like if people knew that their funds were invested into DeFi, yield generating protocols that, weren't really liquid, like staked ETH or something like that. Okay, now you know what to expect. Like you'll be able to withdraw your money when the ETH merge happens, and the liquidity's there to withdraw all the staked ETH or whatever. But since like this was all sort of obfuscated from people, and there was human error with these companies basically lying to people about where the yield was coming from, that's where the blow up happened. But in the actual DeFi applications that were generating these yields, those were all fine. I mean, those operated as they were supposed to, and there was, throughout the whole process, all the different applications, like borrowing and lending protocols on Ethereum, like Aave, staking, liquid staking stuff like staked ETH, all that operated fine. It was more so the human error element that caused the blow up. So what I think is going to happen is basically there was this whole yield generating industry with centralized companies built around crypto. I think basically the trust in that has been lost. So where the trust is going to be regained is within these decentralized applications, these decentralized yield generating applications. So when you're staking a governance token to a yield generating protocol like a borrowing and lending protocol or a trading protocol, you're as a user, you can actually earn percentage of like the transaction fees and the trading fees, and all in a completely like decentralized, trustless way where you can just deposit buy a governance token, stake it to the protocol, and earn your share of that application's transaction fees. That's very real. Like there's a very real opportunity for yield there that doesn't have any human trust involved. And now that the opportunity for the centralized yield vehicles has sort of blown up, I think it's going to push people into decentralized finance and actually be a catalyst for the next wave of innovation that's going to come out of this, where essentially it's gonna really bolster the use case of DeFi. So where I see the most opportunity is basically applications that are facilitating DeFi and crypto networks that are basically layer ones for applications to build on. And you know, where I would be focusing on if I was just coming into this space would be the next generation applications and the next generation blockchains that can facilitate mass scale. So my favorite one that I'm looking at right now is Avalanche, which is basically a settlement network for crypto applications. Um, okay, but other than that, there's going to be a huge amount of opportunity within the application ecosystem of crypto itself. So um, DeFi protocols are the future of finance, and I really think that this is an area worth paying attention to. So, anyways, that's kind of all I've got for today. Um, if you got any more questions, go ahead and put them in the chat now. So yeah, we are looking for some more affiliates to run with us on the network. If you want to work with me and my brother personally and partner with us. Okay, we got another question here. Lorenzo asks, when you did TikTok, did pay-per-call leads to landing pages work, or are you just doing lead ads? Yeah, so pay-per-call was working, but what we were actually primarily doing on TikTok was direct linking to lead offers. So if you're doing pay-per-call on TikTok, you have to use a landing page because you need a page where somebody can go and click on like a click to call button to dial out to the call center. You can't really do direct linking with pay-per-call because it's a phone number, right? So it's got to be on a website where people click the button and it dials the number. What we were doing primarily on TikTok was just direct linking to lead offers. So basically taking like our raw affiliate link, not even using a landing page, just putting a raw affiliate link as a destination URL. And yeah, I mean, we did pretty well with TikTok for the first like 5 months of the year in 2022. We had some pretty big campaigns that did over like 10 grand a day, but just in the past like 30 days, the inconsistencies were just like out of control. Like we'd run something and it would do like amazing ROI, and the next day do terrible. And you know, we're not giving up on the TikTok per se, but for whatever reason, like there's just been a lot more consistency on the Facebook side. And yeah, we haven't been focusing on YouTube as much either. So yeah, I want to get back to maybe focusing on more YouTube like later in the year. I don't know. We really need to keep our eye on the ball with growth, and you know where usually the easiest place to get growth is just by doubling down on areas that you're already like generating a lot of revenue in, areas that you have a lot of skill in already, and Facebook has really been that vehicle for us. So that's where most of our attention is. Um, Cool. Other than that, I'm not seeing any more questions coming in. Um, I hope you guys are doing well. I hope that you guys are, you know, grinding and doing everything that you can to make it happen. So, anyways, I'll wait another minute here. If anything else comes in, it looks like that's it. Anyways, I hope that you guys enjoyed this and got a lot out of this. I will see you on the next one. Take care.